When most people hear the word loan, they immediately think of stress, debt, and financial problems. They imagine years of monthly payments, interest charges, and the fear of owing money to a bank. Since childhood, many of us have been taught one simple rule: avoid debt at all costs. But if debt is so bad, then why do some of the richest people and biggest companies in the world use loans all the time? Why do billionaires, successful entrepreneurs, and large corporations continue borrowing money even when they already have millions or billions of dollars? The answer is simple. The rich understand something about loans that most people never learn.
Subscribe Luxon for luxury travel guides and dream destinations.
They understand that debt itself is not the problem. The real issue is how debt is used. A loan can either make you richer or make you poorer, depending on what you do with the money. One of the biggest secrets the rich don't openly talk about is that there are two completely different types of debt: bad debt and good debt. Bad debt is money borrowed to buy things that lose value or don't produce income. Think about someone taking a huge loan to buy an expensive car they can't afford, the newest smartphone every year, luxury clothing, or an extravagant lifestyle just to impress other people. These things don't put money into your pocket. Instead, they take money out of your pocket every month. The person has to work harder and harder just to make the loan payments. Good debt, on the other hand, is borrowing money to buy assets that can grow in value or generate income. This could include starting a business, buying equipment that helps increase your income, investing in education that dramatically improves your earning potential, or purchasing assets that generate cash flow. The rich understand that the purpose of the loan matters more than the loan itself. Another thing the rich understand is something called leverage. Leverage simply means using other people's money to create wealth. This may sound risky at first, but when used responsibly, leverage can be incredibly powerful. Imagine you have a business opportunity that could generate a good return, but you don't have enough cash to take advantage of it. A wealthy person may borrow money, invest in the opportunity, and earn more than the interest they pay on the loan. The difference becomes profit. This is why many successful entrepreneurs use loans to expand their businesses. They understand that sometimes keeping their own cash and using borrowed money can be a smarter financial decision. To them, money is a tool. Whether it is their money or borrowed money, the goal is the same: use it to create more value and generate even more money. Another secret about loans is that wealthy people understand the power of cash flow. They don't ask, "Can I afford the monthly payment?" Instead, they ask, "Will this loan help me generate more income than it costs?" This is a completely different way of thinking. For example, imagine borrowing money to buy equipment that allows your business to earn twice as much as before. In that situation, the loan is helping you make more money than you are paying in interest. The debt is serving you instead of controlling you. Unfortunately, many people think in the opposite way. They borrow money for things that make them feel rich for a short period of time, but actually make them poorer in the long run. They take loans for luxury items, expensive vacations, and things they don't truly need. Then they spend years working to pay for purchases that no longer make them happy. Another thing the rich don't tell you is that inflation can sometimes work in favor of borrowers. Imagine you take a loan with a fixed monthly payment. Over time, because of inflation and career growth, your income may increase significantly while the payment stays the same. In a sense, the money you repay in the future may be worth less than the money you borrowed today. This is one reason why many businesses and wealthy investors are comfortable using debt strategically. They understand that money changes value over time, and that certain loans can become easier to manage as their income grows. The rich also understand the importance of credit. Your credit history is like your financial reputation. A good credit history can open doors to opportunities that others may never have access to. It can help you obtain funding for a business, expand investments, or take advantage of opportunities when they appear. Many successful companies would never have existed if their founders didn't have access to borrowed money. Businesses need capital to grow. They need money to hire employees, buy equipment, develop products, and expand into new markets. This is why wealthy people often focus on maintaining a strong financial reputation. However, here is another important truth that many people never hear. The rich don't borrow money to impress other people. They don't take huge loans simply to look successful on social media. They don't buy things they cannot afford just to maintain an image. In fact, many wealthy people are surprisingly careful with debt. They borrow money with a specific purpose and a clear plan. Before taking a loan, they ask important questions. Will this loan help me create more income? What are the risks? What happens if things don't go according to plan? Can I still make the payments if my income temporarily decreases? Will this loan improve my financial position 5 years from now? This kind of thinking separates successful borrowers from unsuccessful ones. The average person often borrows emotionally. The wealthy often borrow strategically. Another thing the rich understand is that having access to capital can create opportunities that others cannot take advantage of. Imagine two people see the same business opportunity. One person has no savings and no access to financing. The other person has a strong financial reputation and can obtain a loan if necessary. Who has the better chance of taking advantage of the opportunity? The second person. This is why understanding money and credit is so important. The ability to access capital can completely change your financial future. But there's also a warning that the rich understand very well. Debt can be dangerous. Leverage can multiply gains, but it can also multiply losses. A loan used wisely can help build wealth. A loan used carelessly can destroy financial stability. Many businesses have failed because they borrowed too much money. Many individuals have spent years struggling because they took on debt they couldn't manage. This is why financial education is so important. The goal is not to avoid all debt forever, and the goal is not to borrow as much as possible. The goal is to understand when debt is useful and when it is harmful. Another secret that wealthy people understand is that money itself is not the most valuable asset. Knowledge is. Financial education is. Understanding how money works is. Two people can receive the exact same loan and have completely different outcomes. One person may use it to build a successful business, while the other may use it to buy liabilities that lose value. The difference isn't the loan. The difference is the knowledge and decisions behind it. This is why the rich spend time learning about finance, investing, business, and risk management. They know that understanding money can be more valuable than having money. At the end of the day, loans are simply financial tools. A hammer can be used to build a house or break a window. The tool itself isn't good or bad. It depends entirely on how it's used. The same is true for debt. Used carelessly, loans can trap people in financial stress for years. Used wisely and responsibly, loans can help create opportunities that might otherwise be impossible. So, the next time you hear the word loan, don't immediately think that it is either good or bad. Instead, ask yourself one important question. Is this loan helping me buy something that will make me richer in the future? Or is it helping me buy something that will make me poorer? That single question can completely change the way you think about money, debt, and wealth. Because the truth that the rich don't often tell you is this: they don't become wealthy by avoiding every loan. They become wealthy by understanding exactly when and how to use debt as a tool to build assets, create opportunities, and increase their financial freedom.